Already up there, I'll pile in bed in my truck. Have to beat bottoms up till closing time. Out there, long bars, guitars and bands that play too loud. It's a bartender, do us a favor, give us one more round. When it's quitting time, it's time to find a place in this here town where I can come unwound. I'm honky tonk bound. There's some bikers playing pool, and there's old Steve on that old bar stool. He comes here just about every night. Don't you, Steve? There's always smoke in the atmosphere. There's hot women and ice cold beer. Always a party here till closing time. Here at Long Barns, guitars and bands that play too loud. It's a bartender, do us a favor and give us one more round. When it's quitting time, it's time to find a place in this here town where I can come unwound. I'm honky tonk bound. Yeah. That play too loud. It's a bartender, do us a favor and give us one more round. When it's quitting time, it's time to find a place in this here town where I can come unwound. I'm honky tonk bound. Yeah, let's come unwound, 'cause we're honky tonk bound.
All right. Good afternoon. Can you all hear me? Awesome. Well, it's another episode of Stump Jeff. We got Jeff Shealey on here with HMA Mortgage, and this is your opportunity to come in and ask any questions that you might have in regards to mortgage. I'm going to give Jeff the floor here in a second, and I'd like for him to start out just kind of give an overall update, what's happening in the market, what we need to be watching for, maybe some things that you need to keep in mind as you're starting to work with a new client. But again, this is your time to ask Jeff and to stump him. He's almost impossible to stump, guys. So test him here. Bring your questions. Maybe a challenge that you're having currently with a client, or maybe you have a listing that's sitting, and Jeff might have some tools that can help you move that listing quicker. So Jeff, welcome, and I'm going to turn it over to you. What's happening in the market?
Awesome, awesome, man. I appreciate that. I first off want to say I've been sick the last few days, so bear with me on that part. You may stump me today just because my brain is still medicated. So, but I made it for this. So,
Great, and thank
man,
you for being here.
absolutely. So, most recent information, stuff to think about right now in mortgage land is still the Iran war, right? We keep hearing, oh, we're right there, we're at the cusp, and that keeps going back and forth. But um, another indicator that's coming out tomorrow will be our CPI report or consumer index report, and that will tell us if we're going to have a if we need to lock our loans or float them, or if the market's going to be worse. So just keep that in mind. Over the next day or two, we'll be watching that very, very closely. Ideally, what I tell people right now is if you like it, lock it. Don't play around with the market. It's not worth messing with to try to get a lower rate or lower cost for something. The opposite is way worse at the end of the day. So, yeah, that's what we're seeing on the market side right now.
Awesome. Well, guys, what questions do y'all have to ask Jeff? Not all at once.
If we don't have anything, I mean, we can go over something. I mean, we can go over like VA loans if y'all want to, if that's something that strikes a chord with y'all. Kind of give you some ins and outs on that program.
Jeff, do y'all have a
Uh,
product? Do y'all have a product? I've got several that have a listing and their seller is in the market to buy. Can't buy without a contingency. Do y'all have any programs to kind of float that if they really find something they're interested in and can make a move today?
Absolutely. We have a product. It's our buy now, sell later program. And basically what it's doing is we are putting them under contract on their current home with us and saying that, hey, we will buy this property for X amount, typically what they owe on the property. We do not want to buy that thing. So it's 6 months. 6 months that you guys get to sell it. So you guys list it, you guys sell it for top dollar. We're just there for backup. And what that does is it allows us to not have to count their current home in their debt ratios. And that's a conventional loan guideline that a lot of people don't know or don't follow. If you have a house under contract, your current house under contract, we do not have to count that in the debt ratio. So that eliminates that debt. So the debt to income on the new house could get them to qualify if that's the situation that they're in. The other situation that we're seeing is people just need that equity to put down on their next house. That program can still help. What we would have to do is get a home equity line of credit, get that money out, use it for the next house, and then obviously that would be paid off whenever they sell their current house. Um, that can move, probably need 3 to 4 weeks. We can be working on that as we're working on the new loan, and close them simultaneously. It takes timing on that. And if for some reason I get this a lot, hey Jeff, they found a house and I heard about this product that you have in this program. I need them. I need it. Like we need an offer right now. Well, with that program, we have to have them fully approved through underwriting prior to them finding a house. So they need to come to me first if you know that they're going to be in that situation. And that way we can get that done up front and done. If you know they're looking around, let them know that I will help them. We have to get them into that program sooner than later. It can't be a fast and, I need this in the next hour because there's multiple offer situations going on this other house they want to buy. Um, and then they usually ask what that cost is for that. It's a $995 flat fee. At the end of the day, if you end up getting them under contract before we close on their current home, then we can that fee goes away. They don't even pay for it at all. So
Great for you. Are y'all finding that out there? Are y'all finding that, somebody's got their house listed, but they want to purchase and they've got to have that equity from their home? So you running into that at all?
I have not, but that was definitely some really, really good information that I'm gonna file away. Um, I want to ask a question about programs for modular homes and or mobile homes. Uh, just any and all information you could tell me about that would be great.
absolutely, man. So think of a manufactured home as the same as a single family residence. There's not, I take that back. Now that it can't be moved. Well, just like a single family can't be moved, it's on the it's on the ground, right? So it can't be moved except for when they went and put it out on the property, right? So it can't have a double move, triple move. There are some companies out there that will do those. We don't. But you think of it the same. FHA guidelines are the same. Conventional guidelines are the same. Minimum down payments, all are the same as well. Um, and they're not, and we can do that single wide, double wide, and beyond. Um, as far as like a modular home, A little bit different. The underwriter may ask for at least one other comp that's modular, which is most of the time hard to find. But if those walls are put up the same, they still have the sheetrock and all, it's all the same. They just put it together when they get there. That could be possibly okay. It just depends on how it looks. So. Um, that one's a little trickier. Another tricky one is barn doors. So obviously those are a big deal, been around for a while. People you typically think, oh man, I can get a barn door done for a lot cheaper. It's really about the same as a stick-built home these days to do. But is we have a program as long as there's another barn door comp in the area, you're good to go on that too. So. But yeah, manufactured used to be a really big issue. It's really not anything different except that moving part is usually what'll bite us in the butt. And there's a website we go to find out if it's ever been moved. And all of that has to be documented as well. But other things on those to look for. They want the what do they call it? The piece on there that actually
Skirt
makes that gets it out there.
on the hitch.
That
Yep.
yeah, the hitch needs to be taken off. Thank you. The hitch needs to be removed. It needs to be, bolted down to the ground. The skirting needs to be around it as well. Um, as long as those things are in place or can be put in place, we can do a renovation to take care of that stuff. So
What was the last term you used that needs to be put around it? The what?
the skirting,
Oh, the
skirting
skirting.
around it.
Gotcha.
So sometimes you'll see that as lattice work. I mean, you know, sometimes it's a metal piece around the bottom of it.
And the hitch has to be gone so no one's tempted to try to move it.
That's right. We're not going to hook up and leave tomorrow with it. So
Got
there
it.
goes
Thank
all our
you.
collateral if they do.
Appreciate that. Thank you.
Yes, sir.
All right. What other questions do y'all have? It's great information.
You mentioned something about a house that hasn't sold, has been there on the market.
Yep. So if you have a house, Jeff, that's just sitting, it's a listing. Are there
Mhm.
tools that you can provide as far as marketing? Maybe some ideas around that from the mortgage side.
Absolutely. So, I mean, the first thing I think of, houses have been sitting for a while. Well, a few things. One, we all know like the seller just may not be willing to budge and they think their house is the Taj Mahal and it's not, right? It needs to be moved down and they're just not listening. Another thought is there's something in that home that, man, if it just had a little bit of fixing up or a little bit of sprucing, then it would sell. At that point, I would market that thing as a renovation loan all day long. Um, we can do that for an FHA loan or conventional. We could show the potential buyers. This is side note, get with Jeremy, and I don't know how you guys look at this from this point of view or what you have to put in there verbiage wise, but maybe show some AI shots of what it could look like. If you can't do that on the listing, maybe just have it on a color board or an easel. When people walk in, they can see that visually and go, "Oh wow, yeah, this is fantastic," right? So I don't know, Jeremy, can you speak into that part? Because I do
Yeah,
not want to get in
anytime you're
trouble.
using AI rendering is you have to have it stamped as AI rendered. Yeah, you can't be deceptive in that. So best thing to do is to
Good.
put together, something using like Gamma or some sort of marketing outside the MLS. And as you have people that are interested, you could just fire that over to them separately. Hey, this is what the house would look like with the renovations that are in mind.
Yeah. Um, renovation loan, guys, you're going to need 45 to 60 days to close on that. Only because there's so many moving parts. There's a general contractor, there's a HUD guy that has to go out there because there's always wants and there's needs, right? He goes out there and says, "Hey, these things need to be fixed." On top of your wants, you're good to go. You can have both of them, but we have to have that needs list, so to speak, from that HUD inspector.
And Jeff, do you do flyers for things like that as far as the financing to market the property, like if an agent needs some marketing material?
Yep. Yeah, we have some Reno flyers. I also, if you guys are going and doing open houses, even if it's not your listing, let me know and I can get some numbers put together. If y'all are interested, let me know. Text or email me after this call. I'll get you put into our co-branding um, software, and then we'll get you added to that. So the next one you have, you may not have one right today, but the next one you go to do open house wise, I can get it in there right away. You'll just put your logo in there and your headshot, and I'll take care of the rest.
And that's a for the FHA loan, that's a 203K, correct?
On a renovation, yes,
Yeah. Okay.
203K.
And the 203H is like if it suffered water damage or what's the H?
The H, great one. The 203H, I believe, is either water damage or some kind of catastrophe. Um, but our typical one is 203B, right?
Hmm.
So,
Great. Yeah, if you got a listing that needs just a little bit of polish, a little bit of lipstick on it, that might be an opportunity right there. Is that type of loan?
yeah.
Um,
So 203H is technically a like a disaster prone or disaster property.
Tree
So,
falls through a house during barrel type thing.
yeah, yes.
Yeah, yeah, absolutely. What other questions? So we got Christine on here, Myra. Do you have any questions?
I
I'll
gave him a question yesterday. I called
oh,
him.
you gave him a question yesterday. What was that?
Yes.
What was that question?
It was regarding a person here on a from Venezuela and his status of his visa.
Okay.
Yeah. So we had a co-borrower, non-occupying co-borrower that's here from Venezuela, but his visa expired. And so he's going through that process of getting it fixed. Well, there are some countries that are on a list that if they're expired like that, it's super, super tough to do anything with. Um, and if you only have a visa right now on FHA loans, this was at the beginning of when Trump took over. On FHA, you cannot buy a home. You have to have your permanent residence card to do FHA government stuff. So,
So really important questions to ask, right, when you're doing the buyer consultation is figuring out some of those initial things that may make them not even a qualified buyer, save you hours of driving people around, or
yeah,
at least give you the opportunity to also point them in the right direction so that maybe they can go fix it and come back to you ready to go.
yep, 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 for sure.
What
Um,
is the word? They've got the new guy sworn in for the Fed chair. Powell, I don't think is necessarily going away. He's like moving on to the board.
right.
And so he's still going to have, it seems like some influence there, which is interesting. What do you see in the months to come with all the dynamics of what's happening there? Do you see, at one point we were talking about rates getting down into the mid fives. I don't think that's going to happen
No.
unless I'm not seeing it. Could it get back into the fives? I think so. What's your thoughts? What's the crystal ball that Jeff holds?
Man, so right now it's just so up in the air, right? You have somebody new coming in and they're just touted as amazing and wonderful and they're going to turn this thing around. But on the other side of that, you still have all the economic issues that we have, right? Gas is expensive, going out to eat is ridiculous, getting groceries. I mean, all of those things are just piling up and there's not a way he can wave a magic wand and it lowers interest rates.
Mhm.
So I think we're going to see more of what we're seeing right now, mid sixes, blips here and there, but nothing, nothing crazy going going down to just get rates down in the fives right now. I just don't see it. There's too many other variables, right? We have obviously the Iran stuff. Every other day is coming. Oh, we're ending this thing. No, we're not. Yes, we are. No, we're not. And it's that just messes up markets as well. So I just don't see anything major happening that's gonna change this thing overnight, or for the end of this year, put it that way.
If
So,
the Iran thing comes to an end, and who knows, right? But if it
mhm.
comes to an end, do you see that impacting positively the market
Yeah,
as far as mortgages?
I do. I do. We'll start with, if that happens, we'll probably see, a quarter, maybe a half here and there. But it's going to be peaks and valleys. It's people have got to be ready for it and just happen to have a great day that day and they lock their loan in. It's not going to be something that they can sit on, and wait on. So, uh, it may trigger a small refi, boom. It's going to be very, very small. So, it's just having that window handled, and ready, and dealing with it. So,
So on a lock, are they going to need their subject property in place, or could they do the lock before? How does that work to lock the rate?
yep, we don't have something that we can lock on a TBD. That used to be a thing, oh gosh, a few years ago. There may be a company or two that still do it, and typically they're going to hedge that. So it's going to be a quarter baked into that, quarter point usually, or the borrower is paying for it. We don't have it here at HMA.
Okay. Yeah, I remember them having that, and I haven't seen that in a while.
Yeah,
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 because
it
they were
was.
hedging their bet and losing, is what
That's
was
right.
what was
That
happening.
in
Yeah,
a difference between four and four and a quarter back then, I mean, wasn't huge, right?
right.
So, but when
Yeah,
you're talking sixes, man, you're talking some money on your monthly payment.
yeah. Anything that when agents are sitting down and they're qualifying their buyers, of course, one of the big questions is, are you currently working with a lender? Is there any other questions, really good questions that they should ask in regard to finances and prepping them for that next step to talk to a lender?
Yeah, the one thing that I see a lot of, in the calls that I get are, hey, Susie Joe Realtor told me to give you a call, and she said that, we have down payment assistance available to us. And when you start leading with that, it can create some trouble down the road because not everybody qualifies for down payment assistance, and it's not for everybody. I mean, it's really for that person that doesn't have a whole lot of funds or something's happened, to where they need help. But with those down payment assistance programs, typically you're I'll say you're stuck, but you're in it for at least 3 years, or you have to pay those funds back if you sell, pay off, or refi. And it's not prorated, it's the full amount. So I wouldn't lead with that unless you just know for a fact that they're saying, hey, we just don't have money to do this right now. Then offer that up. But a lot of agents will start with that, and it's like, yeah, I can do that for you, but and we'll show them all their options. I do that with every single buddy that we talk to. Um, but most of the time, I say most, some of the time it's just not worth it to do. That's baked into the rate. It's not free money. It's going to be somewhere, and I don't have control over what those rates are, um, at that point. So,
Well, I think too, what you're alluding to is it also sets it up for potentially not a successful conversation because they go into it thinking, Sil says, hey, you get down payment assistance, just talk to Jeff. And even if there was a better option for them, they're just so focused in on the down payment assistance that if you're like, hey, might be a better deal, it's almost like you're talking them out of it. And they thought that was better for them to begin with, when in actuality it wasn't. So,
yeah.
just you're saying, hey, tee me up, let me look at everything, and then we can figure out like what is the best for them.
That's right. Just say, hey, this guy's going to show you all of your options available. Give him a shot. Let's get you over to him. because at the end of the day, if I go show you homes and you fall in love with one and you can't buy it, I've not done a good job of helping you. So let's get this process going real quick. It really is, it's free, no obligation. Just talk to them, see what you got going, and then we'll go show some homes. Because the last thing you guys want to do is go show houses to somebody that just doesn't have an opportunity or a shot of buying one. It's disheartening to everybody, and gas ain't cheap. So
Um,
What's the,
something,
yeah, Lena,
I'm
go ahead.
sorry, I have a question. Something I have heard is from people who bought a house with a low interest, like 3%, and they want to get a bigger house, but they believe that it's not worth it even when they have equity because they high interest now. Is that correct?
it just depends on the person's information, on their what they need and want, right? Some people are saying that, and they just had an extra kid, and they don't have the room. So it's like, what, you're going to hold on to this low rate and be miserable in a house with more
Mm-hmm.
people in it
Yeah.
than moving along, taking that equity, put it down, and let's talk to the seller. Maybe we can do a buy down and they pay for it.
Okay.
Maybe we do a temporary buy down, maybe we do a full permanent buy down for them. There's ways
Okay.
around that to get their rate back down. Will it be back to the threes? No, but we can get it into the fours with a buy down. Would do
Okay.
a temp buy down. So. Um, it just really depends on their what their needs are. But I've heard that as well. Yep, it's out there.
Yeah. Yeah, I think it's important to make sure, we don't talk a lot about interest rates historically, and this is a good place for you to interject that and maybe even put it as part of your buyer's presentation is I want to show you like what interest rates have been over like the last 40, 50 years. And even when I borrowed money for my first home, and I had great credit, almost 800, I was still at 7.5 on the first and like a 10.25 on the second. It's back when you could do
Mhm.
two loans. Um, and at that time, it seemed fair. I needed a house that wasn't going to change. And, it's that whole marry the home, not the rate, because the other can be adjusted at some point. It could be, refinanced down the road or could be negotiated as a buy down. But if they're really needing something, don't let that hold them up, the rate hold them up. So
Yeah, I was dealing with a gentleman that just he overthinks everything. I think I brought him up in our class, but he's an underwriter and he overthinks everything. He may overthink himself out of buying. And it's like, hey, you're about to overthink yourself out of basically a savings account in a home, and that interest just accrues and accrues. I'm sorry, their
appreciation.
equity
Yep.
accrues over time,
Mm-hmm.
and people miss the point on that. And I said, hey, you're going to be paying somebody's rent because you got to live somewhere, right? It's either going to be yours or it's going to be your landlord's. He's like, oh yeah, I
Mm-hmm.
didn't think of it that way. So sometimes getting people to have that change in the mindset, if they're on the fence of buying right now, that's what I would focus on.
Yeah. And I would say on average, that's probably anywhere from conservatively 2 to 3% a year, that it's appreciating over time.
Yeah,
So that's a lot of money over time.
yeah,
Yeah.
for sure.
Good. Any
Um,
any final questions?
I would
Jeff?
throw out too, just real quick,
Yep.
be careful of what you put out online as far as interest rates go. I see this all the time from realtors, and if someone were to turn you into the CFPB, because you're not putting the proper information on there, um, that could bite you in the butt. It's a TILA violation, truth in lending violation. If you don't have the APR on there, if you don't tell people what credit score you're using to get that interest rate, what the points are that you're buying down, all of that has to be put in there. And at the end of the day, if you're not a licensed loan officer, you're not supposed to be putting that on there. It'd be like me sending out a Trek documents for people to sign. It's just I don't have a realtor license. I don't have a real estate license. So just be aware of that. And it's so super simple to fall into, guys. I see it all the time, and it's not, it's trying to get business going, but just be aware of it. That could come back to bite you. I haven't seen it happen yet, but it could at some point in time. So just kind of be careful.
Yeah. Yeah. I think also it's about staying in your lane. You're not a lender, you're a realtor. Jeff's the lender. You know, get your people to the pros and the people that understand all the finances financing part of it. That's not our job. We just need to ask really good questions, I think, up front to make sure that we're working with the right person and that they're ready, willing, and last one is able. And that's where we get them over to Jeff, and Jeff's like, all right, they're good to go.
Yeah.
And but Jeff, I appreciate you coming on today and fighting through it. I can tell you're not feeling 100%, but you're battling and didn't get stumped today. So bring your questions, bring some tough ones next month. And Jeff, thank you for doing this.
Yeah.
And guys, if y'all are looking for a great loan officer, you know, Trek requires us for presenting to give up to three names. Give them three names and just say, hey, this is my guy. This is my favorite. Give the other two. That'll get you safe with Trek. And always give a disclaimer that whoever you recommend, at the end of the day, they have to do their own due diligence to find a lender. But people do trust you. They trust the relationships that you build. And Jeff is committed to pouring back into y'all. And it's
Yeah.
obvious if you were at the disc class. I call it the disc class, but
Yeah.
the effective communication with buyers to gain more buyers and sellers. That was an amazing class, and I've used some of that already material. And Jeff, thank you for doing that. And I know you'll be bringing more to us over time.
100%. You guys have a good day, and I will talk to you soon. We get some rest.
All right, y'all take care. Thank you.
See you. Bye.